Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today I am going to open your eyes. Many of you are just showing up to this party, and those of you that are just discovering crypto, you spend a lot of time on CoinMarketCap like a lot of us do, and you spend a lot of time refreshing this website to see how much XRP and some of your other digital currencies that you might own go up and go down. But today I'm going to show you what this is really all about, okay? It's not a question. I'm going to show you what this is really all about. And at the end of this video, you're going to know what you really own if you're an XRP holder, because this means nothing. This right here means absolutely nothing. That 62 cents that you're in the scheme of things, that 62 cents that you're looking at, even if you have done really well in this, that 62 cents you're looking at means absolutely nothing, because what is in play here is so much bigger than that 62 cents. And yeah, I do mean in terms of price eventually, and not in as long a period as you might think. That 62 cents is absolutely meaningless if you truly understand what you own, which you will by the end of this video. I promise you. So get ready, strap in. This video may go, I don't know, maybe 25 minutes. It may go 25 to 30 minutes, but that's okay, because at the end of this video, you will know what you own. And the backdrop here is let me tell you what's happened with my mind over, and I've said this on this channel before. And this is just a lesson about focusing in on one thing, folks. For over 2 years, I have gotten up in the morning and I have done between 2 and 3 videos that are focused on this one company, Ripple, and this one digital asset, XRP. And what happens over a period of time when you focus all of your brain on one thing like that is your brain will literally, I wake up in the middle of the night a lot of times and my brain will literally grab subconsciously, hey, I remember this video from back then, and this ties into this, and that ties into this. And your brain will organize everything for you. Your subconscious mind is probably the greatest undiscovered gold mine in the world. And I believe your subconscious mind, once you plant seeds in it, goes to work even while you're sleeping to solve things and to think of things. It's amazing. It's an amazing thing. So my mind delivers up things and puts them all together. And it's because I've done nothing but focused on this one company and this one digital asset for over 2 years. And I've been invested since 2013. So watch what you're about to see unfold right before your eyes. And you might just, this is the video that you go and show to your friends and say, no, this guy, you need to watch this video this guy just did, because this video lays out what's really going on. And this, yeah, there's a lot of money to be made in XRP, but it's a lot bigger than you think. Here we go. All right. So, but before we get there, I want to show you a couple of things about the market itself. Joker had tweeted a couple interesting tweets out this morning. This week, XRP $1. Days to buy XRP below $1 are limited. He keeps on saying this, and he's showing his charts here why he thinks that's the case. And then he's got this one, which I thought was an interesting tweet. The old generation bought properties and got rich. They created the housing bubble. The new generation has to work hard to pay rent. Now tech savvies are getting revenge. I see a day when 0.1 Bitcoin can buy you a mansion. HODL. The definition of wealth is changing. XRP XLM. He is dead right on XRP XLM. And he's retweeting this from Gold Telegraph. Tesla market cap $554 billion. The world's largest gold producer market caps total $124.9 billion. Wow. Okay. So here we go. This is where I'm going to begin to show you what you own. Okay. Remember, BlackRock is the world's largest asset manager. It's the largest asset manager in the entire world. They manage, I think, over $6 trillion, and it might be more than that by now. I don't know. XRP Crypto Wolf says CEO of the world's largest asset manager, BlackRock, says Bitcoin has caught the attention of many and could evolve into a global market asset. He said having a digital currency has a real impact on the US dollar, making it less relevant on a global scale. Now, there's an article on CoinDesk, and then this has kind of been going around today about Larry Fink, who's the CEO of BlackRock. But what all these articles relate to is a speech, or not a speech, but a dialogue that he was having at the Council on Foreign Relations, which I'll show you in a second. But here is a video that was put out, I think this is from CNBC, about what he was talking about.
John, in conversation with Central Bank Governor Mark Carney at the Council of Foreign Relations this morning, Larry Fink acknowledging that Bitcoin has caught the attention and the imagination.
Now listen, while you listen to this, I want you to remember what I've been telling you. Bitcoin is and has always been a distraction. XRP has always been the one, and XLM has always been the brother-sister to XRP. And these guys know it, and they've always known it. Bitcoin is the distraction. That's the shiny metal that they're showing to the average Joe retail. Listen to what's said.
Nation of many people. It's still untested, pretty small relative to other markets, and he says it is seeing big giant moves every day, but it's a thin market. Can it evolve into something real, a global market? Fink said possibly. He also noted that having a digital currency has a real impact on the US dollar, making it less relevant, not for Americans, but international holders of dollar-based assets. He did also raise the question that I think many economists and executives are wrestling with. Does it change the need for the dollar as a reserve currency? In other words, John, are there other ways to efficiently transact overseas as well as here in the U.S.? Fink really joining a prominent number of high-profile voices, Melissa, in the past couple of weeks that are saying, yes, this move that we're seeing in Bitcoin and digital currencies in general, it is generating active discussion, and it's something that they're watching very closely.
Yep, Guggenheim.
Yeah,
right.
They're just sitting on the sideline watching.
The list goes on and on these days.
That's what they want you to believe. Okay. Now, this is a clip from what they were talking about. You'll see Council on Foreign Relations here. Larry Fink, CEO of BlackRock, the world's largest asset management firm, take on Bitcoin. It's always Bitcoin, Bitcoin, Bitcoin. That's all they want to pretend like they're focused on. So watch this.
For the U.S. dollar to be less relevant. The U.S. and I'm not certain. I'm not talking about for Americans. I'm talking about for international holders of dollar-based assets. The question I would raise, and maybe another time Mark and I could talk about it. Does it change the need for dollar reserve as a reserve currency if there was a true digital currency that was separated from dollar-based assets and other things like that? So many questions need to be answered before I could say, is it real and alive? But it certainly has created a lot of imagination, a lot of interest, and it certainly has the potential to evolving into something real. I'll leave it at that. We ran out of time.
All right. So what they do is they always talk about Bitcoin, 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 but they all know that Bitcoin it will never be a payment system. It's too slow. They all know this. They know it's XRP. Now, it's important that you understand that's Larry Fink, CEO of BlackRock. That is Mark Carney. Okay. He was the governor of the Bank of England. He's not now, but the Bank of England is a Ripple partner. Okay. And really, so is BlackRock through PNC Bank. I think PNC Bank owns BlackRock. Anyway, so these guys have a lot more in common. Okay. So this, and I wanted to show you, this is the Council on Foreign Relations YouTube channel, and that's where they're having this little discussion. So let's look at the Council on Foreign Relations. This is the board of directors of the Council on Foreign Relations. You might want to remember that name, David Rubenstein, and we'll go down and see if there's Larry Fink. There's Timothy Geithner, who presided over the 2008 financial crisis. And I just wanted to show you this last guy here, Stephen J. Hadley. He's a principal at Rice, Hadley, Gates, and Manuel. What is that? Well, turns out there's someone named Anha Manuel who is on the Ripple board of directors. And where does she work? Rice, Hadley, Gates, and Manuel, LLC. So this is him. So he's on the Council on Foreign Relations, and you might notice her too. That is Condoleezza Rice, who worked, was Secretary of State, I believe, under George W. Bush. And you'll also recognize this guy. This guy is Robert Gates. He was the 22nd Secretary of Defense. He was also, I think, maybe he was under Obama. Okay. So, and now let's go on down the road. What else do all these guys have in common? Here's the World Economic Forum, Leadership and Governance. Let's go down, and you will find Mark Carney. And there's Larry Fink. And you'll also see that guy that there's Christine Lagarde, and you'll see David Rubenstein, who was also on the Council on Foreign Relations. Now, let's move forward. So we've got World Economic Forum. They're obviously tied into Council on Foreign Relations. And many of you who weren't here may not have ever seen this from Ian Northing. Boom. World Economic Forum CBDC Policymaker Toolkit mentions Ripple XRP. It says right here, most relevant for wholesale CBDC, crypto assets designed for interbank or intrabank payments and settlements. Examples, JPM Coin and Ripple's XRP. Moving along. So this is the Central Bank Digital Currency Policymaker Toolkit. It was put out by the Center for the Fourth Industrial Revolution by the World Economic Forum. This is like a some kind of sub branch of the World Economic Forum or whatever. Anyway, they handed this Central Bank Digital Currency Policymaker Toolkit to all of the central banks that were meeting, I think they were in Davos when they met. All right. So, and this is where this comes from, just so you know. All right. Moving along. Now, many of you have not been here over the last couple of years, and so it's time to take you down memory lane. First, we will show you what Mark Carney said when he was on CNBC, and this is back in 2019. And tell me if you think you can figure out what he might be talking about.
You dropped a bombshell in the luncheon there. That's the way I was described. It's almost like a mic drop. You are exiting this job, almost like a mic drop. And you said we need to go to a global virtual currency. It's a 23-page speech. It's very heavy. Give us the thumbnail. Why can't
I want to know, did you just read the conclusion of the speech, Steve?
No, I read 14 pages, and then I jumped to the conclusion.
So what's the point?
Give us the thumbnail. Why can't the dollar be the global currency?
Okay, the dollar is the global currency. We know that. The challenge is that the U.S. share of the global economy has been reducing. The dollar's share of payments, not just financial assets, but payments, a lot of payments between countries that have nothing to do with the U.S. are in dollars. And what happens in situations like we're in today, where the U.S. economy, to its credit, is relatively strong, is doing better, and the Fed has been doing the right thing, which is, they've adjusted policy, they tightened policy as it was strengthening. Now they're making, the Fed is doing the right thing, but they have adjusted and policy is relatively strong. That means rest of world policy is tighter than it needs to be, and that feeds back on the U.S. economy in a way that ultimately slows this economy. And it leads to a substandard outcome. And in a world where you only have limited policy space, it's a dangerous place to be. And so the trade issues we're talking about are reinforced by the structure of the monetary system. Now, I mean, you've asked a big question, so just give me a second to. But now the issue is, you don't just jump to something new overnight. And what we want in a multipolar world, I think we'd agree that we've got European engine, we've got the Chinese engine, we've got the U.S. engine of this economy. Multipolar world, you need a multipolar currency. The question is, how do you get there? And I laid out some ideas of how you would get there.
And the bottom line,
I know how you get there.
All of the pressure on the difference in growth around the world would not fall on the dollar exchange rate.
Yeah.
It would be spread out if it was a global basket of currencies.
It would be spread out as global basket of currencies. It's better for the system as a whole. It's better. It raises that equilibrium level of interest rates.
Right.
It gives central banks more policy, but it gives people who are watching greater returns on their savings.
Well, certainly worth thinking about. Governor Carney, thanks for joining.
Okay, and then we're still on memory lane. This is Larry Fink back in October 9th. Now, remember, the whole thing has been, we're skeptical about this Bitcoin thing, and they just talk about Bitcoin, but they don't ever bring up the one. They don't ever bring up XRP. They don't ever bring up Ripple. That's always graveyard talk. But they will talk about Bitcoin and how I'm kind of nervous, and I just want you to see where these guys have been coming from. This is back on October 9th of 2017.
We are a huge believer of the eventuality of a digital-based currency. It would certainly save a lot of money, expenses, if we had a global digitized system for all financial transactions. But we don't believe it'll be a reality for a number of years. To transform societies from physical currencies to digital requires a global system of payments. What we're saying now is
Imagine that.
these cryptocurrencies that are the amount of illicit behavior that's really happening day to day. That's why I love what's happening. It becomes much more transparent. This is what's so fantastic about it. We should not think that this is just happening. No, it happened all the time. It's now becoming a little more transparent. You know, there was other ways before cryptocurrencies that illicit transactions were being done. Sure. Okay, so now it's being done. It's becoming a lot more visible and it's being rooted out.
All right. That's what it's been about all along, folks, is transparency so that you know exactly what's going on. It's a shared ledger. Okay. Now this is Larry Fink from back in July of 2018.
Is it true that you're building out a cryptocurrency capability?
No. I mean, we're looking at it. As I said in the past, we are very excited about blockchain technology. That's what we're looking at, even in the Aladdin universe, what we're trying to do there. So we're looking at blockchain technologies, and we're looking at all the crypto.
Blockchain isn't crypto. Blockchain is just the underlying technology.
Well, that's the most important thing. Whether it is a cryptocurrency, we're studying them to see how they're performing. And it may be, it may be.
Don't your clients want crypto exposure?
No, I don't believe any client.
I remember when he said that, I was like, wow.
Exposure.
Really?
Yes.
But at some point they might.
Man, look at his eyes
blinking. Do you need to be prepared?
I don't, at the moment, no.
It's interesting.
Yeah.
Goldman Sachs is building out a cryptocurrency trading desk. Morgan Stanley is doing the same thing.
Well, I'm not in the trading area.
Morgan's doing the same thing.
Yes, because there's elements of people who are looking to trade it. I have not heard from any one client they're looking to buy a cryptocurrency at this time. When it becomes more legitimatized, when it has the true open nature of it, that you identify who the players are on both sides, that's when we'll probably look at it as an alternative to all currencies. But I have
right now you are where then? You are.
What do you mean?
Just studying it?
We're studying it. We're looking how they perform. We're looking at that type of data to understand it as we think about other products. But right now, I can tell you it worldwide. I have not heard from one client who said, I need to be in this.
I remember seeing that. That was back in 2018. And for those of you that weren't there, this is the kind of thing that while I was doing this channel and I was telling people, no, I know what this is. This is very obvious what this is. And these people are giving us these head fakes and telling us that it's not what we think it is, but it was what we think it is. And you're starting to see it now. Now, I'm not done yet. Here we go. This is Larry Fink in August 31st, 2019. What do you think he's talking about here?
And when you think about all the people who send money, they may work in one country, send money back home. They generally do that through organizations that charge 5 to 10%. Yeah. There is a need, whether it's a Libra or something else,
that we can't
to democratize the exchange of foreign currencies. Today, with computers and electronic market,
he's talking about FX, democratize foreign currencies, what he's talking about, FX.
Shouldn't be that.
It should be 10 basis points, 5 basis points.
That
it's
makes
not
sense.
percent. And so I actually believe the idea around Libra, I don't think we need to create a new currency, but the technology to instantaneous calibrate all the currencies, that should be done. And when you think...
All right, so there was that. Well, it just so happens this was, November 24th. FX markets are joining the XRP ledger soon. Liquidity, settlement, financial giant SBI to test XRP in the $6.6 trillion foreign exchange market. And by the way, that's $6.6 trillion a day is what that is. This is all a coincidence, FX. He's talking about it. Okay. Now, then we have this. This is just from a few days ago, November the 20th. We all of a sudden have a BlackRock guy who is talking about how Bitcoin could replace gold, and that now all of a sudden they're open-minded to crypto.
Before you go, you had alluded to the distinction.
And by the way, this guy right here, he was with Lehman Brothers back during the financial crisis. There are no coincidences
between what's happened with the price of gold and Bitcoin. And you said that you think it's moving towards Bitcoin. Is that a long-term trend? Does that mean you're a Bitcoin bull? I asked because we had talked to Jamie Dimon earlier this week, who, despite JP Morgan supporting crypto in a very big way, and actually Bitcoin to some degree, on Bitcoin itself, he seemed to think it's still very possible if it ever really reaches escape velocity, and maybe it's getting closer as it passes $18,000 per Bitcoin, that the government actually would try to regulate it.
So, Andrew, I mean, I think cryptocurrency is here to stay. And I think it is a durable, and you've seen the central banks that have talked about digital currencies. I think digital currency and the receptivity, particularly millennials' receptivity of technology and cryptocurrency is real. Digital payment systems is real. So I think Bitcoin is here to stay. I think, am I a Bitcoin bull? I mean, I don't do a lot of it or virtually any of it in my portfolios, my corporate portfolios, my business portfolios. But do I think it is probably, it's hard to say, is it worth the price it's trading at today? But do I think it's a durable mechanism that do I think will take the place of gold to a large extent? Yeah, I do, because it's so much more functional than passing a bar of gold around. And by the way, the way you can track.
Anyway, BlackRock has been activated, folks. That's the term. Let me write that down. That needs to be somewhere in my title here. Activated. Okay. Now, we're not done yet, folks. I'm not done opening your eyes. You are going to have your eyes open. All right. That's got to be written down too. Okay. Next up, for those of you that don't know, Robbie Ripple on the future of global finance. Robbie Mitchnick cuts an impressive profile during his time at Queens. He served and then he said, where does it say? So that's Robbie Mitchnick, and it says this past summer he completed a product marketing internship at Ripple, which has rapidly emerged as the center of the commercial blockchain universe, gaining international notoriety as the creator of XRP. So Robbie Mitchnick was at Ripple, and then he goes to BlackRock. That's Robbie Mitchnick at BlackRock. Okay, we've shown this video before. I'm not going to show it now. And then there was this tweet. Robbie Mitchnick, head of digital assets at BlackRock, former Ripple employee. Now read his statements very closely here, while remembering in the back of your head that BlackRock is using the Fed's cash and equity of the Treasury to buy all the debt. Robbie Mitchnick, this lady goes, Mary Kathleen later goes, she says, that's like most of finance, right? Yeah, right, exactly. So it's things like, of course, payments, KYC, trade finance derivatives, proxy voting, bank loans, securitized lending, repo, and then beyond that, there's this whole emerging trend of tokenizing financial assets and other real-world assets on a blockchain. So all of those will be very much interesting to watch. KYC, trade finance derivatives. I didn't even intend to show you this, but KYC, trade finance derivatives. What does that remind me of? Well, I'll show you what it reminds me of. Reminds me of this Everest document that I keep showing you. Ripple becomes the standard for international money transfers between banks. ILP becomes the standard protocol. That ends in 2020. 2020 to 2025, blockchain solutions for capital markets and trade finance emerge. There you go. All right. So back to Robbie Mitchnick. So he's talking about KYC trade finance derivatives, right? Well, there's two people that I'm most fascinated with that disappeared from social media that were around back around 2018. One is Kendra Hill. In this tweet here, which I've shown you before, Esoteric XRP summarizes some of the things Kendra Hill said before she disappeared. I'm assuming it's a she, disappeared off of, I think she was on Steemit. Kendra Hill revealed a few things back in 2018. 1, XRP plus XLM were the chosen ones. 2, Ripple and Amazon announcement coming. 3, Codius was not dead. 4, cross-border payments was only a test. The $100+ trillion derivatives market is the real target. Okay? Let's see if there was anything else that we needed to bring to your attention. Talks about derivatives trading platform, And then there was another one that disappeared, Rachel Lee. This is a post on XRP chat from July 28, 2018. We've pointed this out previously and do so again. Ripple's current partnership focus is on strategic interest, FX markets, oil markets, derivatives, not so much remittances as they make you believe. So this is two different people on social media that disappeared off social media that were saying that it's always been about FX and the derivatives markets. And I believe BlackRock is right in the middle of all of it. RizXRP sent me this. This just happens to come out yesterday, folks. Ripple's Brianna Madigan explains why derivatives are the building blocks of every market development cycle, including the crypto market. Read more on Insights. And here's the Ripple Insights that she wrote. How do derivatives drive new entrants into the crypto market? I wanted to draw your attention to the last thing where she's got a link out. Remember, all we see is the Office of the Comptroller, Brian Brooks these days. It says, today, the Office of the Comptroller of the Currency estimates that banks currently have exposure to more than 200 trillion notional worth of derivatives, underscoring their global importance in financial markets. And this is the link right here that takes you here. From International Banker, crypto derivatives are on the rise. And the last paragraph is kind of interesting in this. It says, at present, the Office of the Comptroller of the Currency estimates that banks currently have exposure to more than $200 trillion notional worth of derivatives, underlying just how important they are to so many market participants the world over. As recent evidence shows, there is no reason why crypto derivatives can't contribute to that exposure, as their inherent functions continue to consistently prove useful to crypto traders, namely speculation and risk management. The justification for staying away from the space becomes consistently weaker. And as such, with the biggest players starting to enter the space, it would seem that cryptocurrencies are now gaining legitimacy and credibility for which they have so eagerly sought for over many years. And then there's this. This is a recent Ripple hire. Aditya Tarakia. I'm sure I butchered that. He's the senior manager, global institutional markets. He left Goldman Sachs. Now, he left Goldman Sachs to go to a 7-year startup. Why would he do that? I wonder why. He was the executive director of global FX and emerging markets franchise management at Goldman Sachs. I mean, the guy was there for quite a while. So the dude was probably making over $1 million, but he thought it was a good move to leave Goldman Sachs and leave that huge salary and go over to this little startup called Ripple that happens to be planning to put a dent in the universe or go away. I guess he thinks they're going to put that dent in the universe. And by the way, he decided to comment on the article from Brianna Madigan. 2020 has been a phenomenal year for institutional adoption of digital assets. Crypto derivatives have allowed for market participants to access pools of liquidity in a cost-efficient manner, mitigate market risk, gain access to digital assets, and obtain leverage for trading activities. So, folks, yes, crypto is exciting. Coin market cap is exciting. And XRP is at whatever, 61, 62 cents. But I'm here to tell you, folks, write it down. What you see here is peanuts compared to where this is all going. And this has always been, XRP has always been about FX and derivatives. And those markets are monsters. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that, yeah, $1 to $10, that might sound interesting, but that is a joke compared to where this is really going. Thanks for listening.
Every day, billions of people around the world are mocked, ridiculed, laughed at, and embarrassed by their friends, family, and even strangers. These people go through their days knowing there are secrets being kept from them. They hear the faint whispers behind closed doors. The information and knowledge is held very close and only shared with others who were fortunate enough to find out. Feeling lost, rejected, and ostracized, these people give up, never finding out what digital assets the digital asset investor holds. But there is hope. Join the free Digital Asset Investor email newsletter and find out what digital assets he owns each month, including investments he's considering. Click the link in the description of this video or go to digitalassetinvestornewsletter.com. Put an end to your days of gloom and depression. Join the greatest free digital asset email newsletter ever created.